Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Today is Friday, it's also the last trading session of the month, the week, and in fact it's also the last day on which you can file your IT tax returns if you haven't yet without paying a fine, so go ahead and do that if you haven't. Alright, the big headlines this morning. Asian stocks are off to a weak start after the US President Donald Trump affirmed the plan to impose new tariffs on China. In an exclusive interview with Bloomberg News, US President Donald Trump warns of pulling out of the World Trade Organization if it does not treat the US better. In another Bloomberg exclusive, Berkshire Hathaway chief Warren Buffett says he will continue buying stocks as they remain the most reasonable investment compared to fixed income. And ICICI Bank MD and CEO Chanda Kochar won the resolution for her reappointment as director on the board of ICICI Securities with a comfortable margin. And finally, the Indian women's relay team, along with Jinson Johnson, bring home India's 12th and 13th gold medal at the ongoing Asian Games in Jakarta. Let's start with the US stocks first. US stocks posted their first losses in the past 5 sessions, in fact, and the S&P 500 and the Nasdaq snapped a streak of 4 consecutive records as a plethora of global worries buffeted equity indices in the first week of August. In the final week of August trading. Abigail Doolittle of Bloomberg News wraps up all the Wall Street action in this report.
Stock snapped a 4-day winning streak in Thursday's Wall Street session on renewed trade war fears. There was a Bloomberg scoop that President Trump is said to back $200 billion worth of tariffs against Chinese goods as early as next week. On this, the Dow finished down more than 0.5%. The S&P 500 was down about 0.4%. The Nasdaq, the tech-heavy Nasdaq, after trading earlier in the day, putting in yet another all-time high, finished down a little less than 0.3%. Now, at the end of the day, the sector composition for the S&P 500 bearish as well. 10 of the 11 S&P 500 sectors lower on the day. Just the utilities, a defensive sector, higher, slightly higher, while the other 10 lower on bottom. Materials down more than 1%. The industrials lower as well. Those sectors are most sensitive, tend to be most sensitive to trade war headlines. Now, among the worst laggards for the industrial space, Caterpillar, Boeing, along with Kansas City Southern and Union Pacific. Those are companies that tend to trade lower on these headlines as investors worry about higher input costs on tariffs, also lower demand if a trade war really kicks in. While the material space, the miners, Freeport-McMoRan and Nucor really down, Newmont Mining down. We also Dow DuPont, the chemicals company, lower. Lots of weakness there, again, for the industrials and the materials space. On those trade war headlines. And while the Nasdaq did put in that all-time high earlier in the day on strength from the likes of Amazon, Apple, and Facebook, at the end of the day, we did again have stocks declining, Haven bonds, and the yen higher, telling us that Thursday's Wall Street session turned out to be risk-off. In New York, Abigail Doolittle, Bloomberg News.
Now, President Donald Trump has threatened to upend the rules of global trade, saying he would pull out of the World Trade Organization unless it adopts rules that are more favorable to the United States. The threat comes amid tense negotiations over the North American Free Trade Agreement, which Trump wants to replace with a brand new agreement with Mexico and Canada. Bloomberg's editor-in-chief, John Micklethwaite, discusses his takeaways from the President Donald Trump's Oval Office interview with Bloomberg News.
He sort of radiates a kind of confidence which not everyone is going to agree with, but he's got that sense that he thinks he's winning all the various battles across anything, and he still hasn't stopped thinking up new big ideas.
Yeah.
He's looking at things like the capital gains tax on indexation. He's looking at things. He was particularly bellicose, I thought, on Europe. He said that Europe was nearly as bad as China, and he's just rejected the offer on auto parts or on cars, which for the Europeans was a big deal.
Yeah, actually, I want you to stop there for a second because we had not seen that. And frankly, there was a bump in the European auto stocks earlier today on the possibility of tariffs being removed. That's off the table now, you're saying?
He said that wasn't nearly enough and that he wanted much more from Europe than that. So that wasn't a kind of starting chip. Again, I had the same impression that you did, that this is quite a big deal for the Europeans to offer it. But his response was, this wasn't enough.
John, judging from the reaction on Twitter, the big thing people are talking about is what he said about Jeff Sessions and the fact that he's safe till November, but that you said in the interview he didn't comment beyond that. What was he like when he did not comment? What vibe did you get from there about what he's thinking of?
I asked how many days after then, and he ignored the question. But I think I don't think it's just Trump. I think there's a general noise out of the White House at the moment that Sessions is okay through to there. What Trump then went on quite a lot about was the idea that he wanted Sessions to be looking at other things, especially to do with the Democrats and not just him. And at the end, he returned to the idea that he thinks it's impossible to impeach a successful president.
Okay. What about in terms of, did you talk about his reaction on the markets? Because it's interesting, from the shot across the bows to China today, we did see the stock market fall. Is he aware of his interaction with the stock market? Did you get that sense that he feels he's sort of omnipotent in that way?
I think he sees himself as part of, he looks at the stock market as one indicator of how well he's doing. He's proud of the economy. I think he a little bit mystified by why he might get beaten in the midterms, given how well he sees the economy going. Obviously, outsiders might say that isn't wholly his achievement to have got that far. I think generally, we asked him, for instance, about the fact that he keeps on bashing the main companies that are behind that huge surge in the markets. Joe and I have talked about this for years, but you look at Google, Facebook, Amazon, these are the very companies that are driving up the stock market. These are the ones which foreigners tend to be most envious of when they look at America, and yet they're ones that he seems to criticize most.
John, I want to go back to the capital gains and taxes, because a lot of conservatives have raised issues about the increasing deficit in the U.S. Did he talk at all about that, or how much support he had for essentially lowering taxes on some of these equity investments?
He actually asked us what we thought about the capital gains issue, and where we pointed out, which is correct, that many other countries do actually have indexation on capital gains. It seems, in some ways, it's a reasonable thing to do. The issue is whether, it might be a tax cut which is more sensible than other tax cuts, but as you point out, it would add to the deficit.
And whether it would be good politics to lop on another tax cut for rich investors is probably also a question. Another line that he said with regard to monetary policy, he said, I'm not sure the currency should be controlled by a politician. It sounds pretty sensible. Like, when I read his comments about the Fed, other than that, okay, maybe he's not a fan of the rate hikes, he seems perhaps pretty respectful of the concept of Fed independence, which was something that I think people were curious about, whether he would have that view.
I think he's got more respectful. You basically have a man who loves running everything, and it's rather irritating to him that he can't control this thing. But actually, in this case, I think you have to give him credit. He seems to have walked back a bit from that. He was making much more bellicose noises about the Fed earlier. He talked a bit about being a businessman, that back then all he liked was low interest rates and a cheap currency, that he thought those were good, except when he was buying golf courses. And so that's his perspective. That's where he comes from. And he talks a bit, he did this in another interview, he talks a bit about wanting to be accommodated. But if you push him on that and say, what do you mean by that? He doesn't want to step over the line. So I think to that extent, it looks as if the Fed has begun to win that battle.
So it seems as though Jay Powell's safe. John, he thinks he is safe as well. Talk a little bit more about how the fact you feel that you can't impeach a sitting president as it stands. Well,
no, I think he thinks it's very hard to impeach a successful president, which is how very much he views himself. Which he says he would give himself an A star, I think, in terms of his personal mark so far. So he doesn't. His point is that politically it's very difficult to do. On the midterms, he remains. He remains, I think, somewhat wary. But he thinks that if it was the midterms purely about him, he would do very well. You could argue about the rights and wrongs of that, but he thinks that he's doing very well with his base. That he's still got a kind of political clout there, even if that doesn't necessarily translate into him hanging on to the House in the midterms.
Now, there are several talking points from that interview with Donald Trump, and they'll all be available on the website bloombergquint.com over the course of the day, so do check it out. On to the big news and big voice of the day, in fact. Berkshire Hathaway Chairman Warren Buffett says he continues to buy stocks. In an exclusive interview to Bloomberg Television, Buffett said that investing in stocks for the long term is still a better option than investing in fixed income. Listen in.
Well, value gains from year to year. I mean, as companies retain earnings, stocks basically, if you own a business and you plow back a good portion of your earnings into building the business, you're going to have something more valuable on average year after year. Now, sometimes the market reflects it, and sometimes it's crashing for some other reason or whatever. But the stock market builds in value, underlying value from year to year. And it's grown a lot. I bought my first stock when the Dow was just under 100 when I was 11 years old, and look where it is now. I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other, and your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond which can never earn more than 3% while you own it? Well, I love it when there's, I don't love it for the country as a whole, but I mean that creates prices that make me want to shovel out the money as fast as I can. But we've been shoveling out money anyway, and it's not as attractive as obviously when I was buying in 2008 and 2009, and that wasn't as attractive. 1974 was the best year for buying securities in my lifetime. That'll happen from time to time, but you can't sit around and wait for it. You're never going to catch the bottom anyway, and everybody will be terrified at that time. We keep buying as long as we find something that's attractive to us, an attractive business at a reasonable price. And I love it if it's a really juicy price, but I still keep buying.
It's amazing how the fact that Warren Buffett's commentary over buying stocks and his strategy in the markets haven't changed really in several decades. But with that, let's talk about the Asian markets and the fact that they're all down in early trade. The Chinese markets have opened up, and they've understandably, under that pall of the possibility of the imposition of new tariffs by the US on Chinese imports. Those two benchmarks are down about 0.5% in early trade. The Hang Seng, in fact, has lost more than 1.4% in early trade. But then we're still waiting for a little more clarity on how those markets are going to do. It's still early minutes of trade in Asia. The Nikkei, of course, the early risers down. The Nikkei was down a little over 0.4%. It's now gained some ground, and it's now down about 0.3%. But with that, let's turn to Agam Vakil, who's here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Good morning, Agam. How's it looking today?
Good morning, Alex. We've moved into a new series, so we'll be watching out for how benchmark indices react into the September one. And with that, well, at this point in time, we really aren't looking at a very positive opening to the series, or for that matter, the trading day, considering the SGX Nifty is indicating a decline of around 27 points. But in our own markets too, it was largely range bound. Well, a subdued expiry, if I can call that, considering the Nifty closed marginally in the red, and marginal moves for the broader market indices as well, for the small cap index, which advanced by around 0.5%. The Nifty banking index and the PSU index, again, well, marginal cues coming in, mixed cues coming in though. But two sectors which did stand out yesterday were the FMCG sector, going from strength to strength, and the Nifty pharma sector as well, up as much as 1%. Let's take a look at the ADRs then, and there's some weakness seeping in through based on the markets abroad. Tata Motors is the one which is taking a knock around 2.5%. Among other ADRs, let's pull up the other names as well. And well, Infosys is the only one which is looking at a 0.5% gain coming through. Let's move on and talk about other variables. We have FIIs which bought 958 crores worth of equity on a net basis. DIIs, on the other hand, looking at a little bit of a reversal of trends, sold stock worth 1,600 crores. when it comes to contributions, it was fairly mixed because we did have 15-point up move contributed by ITC. On the other hand, 18 points decline contributed by Reliance Industries. HDFC Twins continuing to bear down on the markets. On the other hand, ICICI Bank advancing. So we've had extremely mixed cues when it comes to the benchmarks. But when it comes to futures, well, we have a new series, and well, rollovers stand at around 68%. Of course, September is starting off with around 24 odd million shares in open interest. When it comes to the Nifty Banking Index too, again, a rollover standing at around 65%, well, a tad below the previous 3-month average of around 67-68%. And when it comes to open interest distribution, this is where we're watching out for. It's currently at around 11,600 and 11,800 in terms of maximum open interest for puts and calls. This is just a 200-point range, but this is likely to narrow as we move into the series. In terms of the most active options, it was 11,700 calls and puts, unwinding scene and puts. Let's bring in the Nifty, or rather, yeah, the put call ratio that has come off even further at around 1.57. Now, and the Nifty banking put call ratio also at around 1. And in terms of others, we're watching out for Sun Pharma. We did have a day of strength come through. The top Nifty gainer, fresh longs there. Also fresh long, or rather fresh shorts in Eicher Motors on the other hand, which was on the losing end of the Nifty. And finally, something like an NHPC, which did see a lot of traction yesterday. Well, it declined by around 1%, but we do have some shorts building in. So these are just some of the stocks that we're watching out for. But Alex, as one might expect, we're going to see a little more weakness coming through because of the fact that many believe that the Nifty genuinely is very, very overvalued at this point in time.
And speaking about futures, we've actually got viewers who are quite keen on watching your special program on BQ Learning, if I'm not mistaken. I believe it's just a short while away.
That's right, yes.
All right. All right. With that, let's take a check on the rupee and the bond market. Saloni Dhanuka is here with all of the updates there. Good morning, Saloni. Rupee in focus again today after having closed on a low.
Yes, Alex. So the rupee yesterday continued its downward movement for the second straight day and ended at a fresh record low at 70.74 levels against the dollar. Sustained month-end dollar demand along with rising crude oil prices and also strong dollar overseas largely weighed on the rupee yesterday. Remember, the home unit did touch all-time low versus the dollar at 70.86 levels yesterday. Traders do believe that RBI did intervene in the currency market at multiple levels to defend the currency fall. However, it failed to do so, and we have seen rupee closing at a record low for the second straight session yesterday. Well, speaking of the bond market, sovereign bonds declined for the fourth straight session yesterday as 10-year benchmark bond yield ended 1 basis point higher at 7.93%, which is its highest level in over 2 months. On the global front, dollar traded higher versus major currencies yesterday, and it snapped its 4-day losing streak and ended marginally higher at 94.72 levels. Now, dollar gained after US inflation data continued to meet Fed's target of 2%, and also if you see the consumer spending, it remained firm, thereby indicating that central bank's case to hike rates gradually is on track. And well, if you see euro and pound, both the currencies are trading lower versus the dollar in the early Asian hours. And lastly, if you see dollar rupee now, it is trading at 70.90 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. And of course, after market hours, there's going to be the release of data that's going to be crucial for India as well. You have the GDP data for the first quarter growth, of course, that will come in around 5:30, so do watch out for that. All right, with that, it's over to Shraddha Babla for the stocks in news. Shraddha, what do you have for us?
Alex, first on the list is undoubtedly Yes Bank, where the RBI has approved Rana Kapoor's continuation as MD and CEO till further notice from RBI. That's what they've said. So clearly the stock had been under pressure over the past few days on account of lack of clarity over the RBI approval for Rana Kapoor's extension. So that's clearly one stock which is likely to do very well today. Watch out for that name. NCLT has approved Idea Vodafone merger. That's the ET report. So we might probably hopefully see some positive sentimental reaction on the back of that development. Idea Vodafone now will replace Bharti as the largest telco in India. You have Sorrel Infra Resources, where the board has approved raising of funds to the tune of 210 crores. This will be done via a preferential issue to Steadview Capital Mauritius and ABG Capital. The price of the preferential issue is 539 per share, a 5 to 6% discount to yesterday's closing price. Let's see how this one reacts. Dilip Bilkon, there's a letter of acceptance for a new EPC project worth nearly 1,700 crores. Similarly, for PNC Infra, they've been declared as the lowest bidder, or L1, for a EPC project worth about 2,000 crores. So again, those two names on the back of these order wins. HCC-owned Lavasa Corporation has been admitted under the insolvency resolution process. Negative development, of course, because HCC owns nearly 69% in this company. So watch out for HCC, as also Jet Airways. Now, according to a Times of India report, the government has ordered a formal inspection of the company's accounts, and they will examine if there was any siphoning of funds in the airline. So again, that's another counter which will continue to remain under stress, but those are some of the stocks to watch.
All right, thanks so much for that, Shraddha. Now, HPCL is looking to raise up to 12,000 crore rupees via debentures and bonds. It plans to put a chunk of this money to use to upgrade and expand its existing refineries. Bloomberg Quint's Ridhima Saxena caught up with MK Surana, the chairman and managing director of HPCL, and started off by asking him about the company's capex timeline.
This year, our two main projects are expansion of our Mumbai refinery and Visakhapatnam refinery. Visakhapatnam refinery is expanding from 8.33 to 15 million ton. That capex is around 20,000 crore. Mumbai refinery expanding from 7.5 to 9.5. Then we have got expansion of Mundra Delhi pipeline, Palanpur to Vadodara pipeline. We have got Vijayawada to Dharampuri pipeline, Badurgarh Raman Mandi pipeline. So we got around 5,000 crore capex on that. Mumbai refinery expansion 5,000 crore. Vizag is 20,000 crore. Total, we got at next 5 years, we got 75,000 crore capex. Rajasthan refinery is another one. And this year, 18-19, we got a capex of 8,100 crore.
Also, when we talk about alternate fuels, LNG is one thing that you're focusing on, especially with the Chhara terminal. Could you help us understand how would you source LNG? Are you contacting any foreign suppliers for the same, or would you look at LNG spot market to source the same?
No, we'll look at a combination of both things. So we are in touch with the foreign suppliers. So we may have a combination of term contract and the spot markets.
Also, when we talk about alternate fuels, what would be some of the plans there, considering, oil prices are on the rise and alternate fuels would be an option that the government would be considering by 2030. How does that really pan out for the company, and what is it doing in that regard?
So ethanol is one thing. You might be knowing that HPCL already have got 2 mills which produce ethanol, but we are also looking the 2G ethanol, the second generation ethanol, which is produced from bio waste. In this, in Bathinda, in fact, at 4 places we are looking of setting up these bioethanol plants using the bio waste. Bathinda, we already have taken the land and already have finalized the technology, and we are proceeding on that. And other 3 places also we are looking. Capex, we are just firming it up, but it will be less than 1,000 crore for each plant. Less than 1,000 crore, but we are firming it up now.
Also, when we talk about, in the larger scheme of things, the ONGC-HPCL merger is done, and now HPCL will either merge or acquire MRPL. How does that really work out? What would be the timeline for that? And once that happens, how would the decision-making process really flow?
So as far as HPCL and ONGC is concerned, HPCL continues to be an independently listed company. So that is not a merger actually, that is an acquisition. So they are our majority shareholders, but HPCL is not merged with ONGC, so HPCL continues to be a separate listed company. That's one part. As far as MRPL is concerned, we are in discussion with ONGC, and there is a congruence of thoughts on that, yes, this is a good idea to have this downstream portfolio together. We are in discussion. There are 3 entities involved, and it will go to the board of all the 3 companies, and there is a statutory process which gets involved. We are already in active discussions with ONGC on this, and once we fix up those contours, then it will be proper for me to tell you exactly the timelines for it. But as far as the control mechanism is concerned, both the companies, HPCL and ONGC, are board managed companies, and if MRPL is a merger, then it gets merged with HPCL. In that case, it becomes a one entity to that extent.
All right, now a day ahead of the expiry of its term, the Law Commission has endorsed the Modi government's proposal to hold simultaneous polls to Lok Sabha and state assemblies, saying it will prevent the country from being in a constant election mode. But it sought further public discourse on the issue before arriving at a final decision. Arpan Chaturvedi has more details in this report.
Well, this is the draft report which has been uploaded by the Law Commission of India, and in principle they have agreed to the idea of holding simultaneous elections, and of course they have given some measures how elections across various states can be synchronized, and what the Law Commission has, the idea that they have come up with will, if accepted and implemented, will lead up to synchronized elections and simultaneous elections starting from the year 2024. The Law Commission has given certain reasons for it, why they feel that holding of simultaneous elections is a good idea. They said it will help in saving money, as well as better help the administrative parts and the administrative bodies to focus on other issues and work if they are let go of the pressure of constant elections that keep happening. The Commission had also invited views from various political parties, out of which the ruling BJP had supported the idea along with 10 other political parties, and there were 10 parties, including the opposition Congress, which had opposed the idea of simultaneous election. Remember, the Commission also in its report has made it clear that this is just the draft report that they have put out in public domain, so that there can be discussions as to what all constitutional amendments and other measures will be needed to help implement this idea. And of course, after that, the Commission says that it will submit the final report to the Government of India.
ICICI Bank MD and CEO Chanda Kochar managed to retain her seat on the board of ICICI Securities. She won the resolution of her reappointment by a comfortable margin. Shareholders of ICICI Securities were more than happy to have retained her as part of the board. Ridhima Saxena caught up with a few of them on the sidelines of the AGM. Listen in to what they had to say.
What I have observed, what I have studied, and what according to the best of my knowledge, I feel there was nothing wrong. If any director is involved in any transactions or something, and which is legitimate and which is very valid, so I don't think it should have any bearing on anybody. But then people have their own ambitions and they have their own point of view, so nothing can be done about that. But personally, I feel that she is still clean and there's no problem with it.
There was conflict of interest when it comes to the Videocon transaction. Till that conflict of interest kind of gets proven incorrect, do you feel that she should continue as the MD and CEO of the bank?
Yes, absolutely she should continue. Until unless you are not proved guilty, even the court says that, okay, you are not a criminal. So until unless you are not proved guilty, so I don't feel there is any chance that she should just step down or just get out of it or something like this, because everybody's got a fair chance to put their point forward. So fairly we should give her a chance, and we should wait for the truth to come out.
Actual में जब इतना बड़ा एक आरोप लगा हुआ है और लोगों के मन में शंका है, तो एक कहावत है कि सीजर्स वाइफ टू बी अबाउ ऑल डाउट्स, तो उनको अपना क्लियर होना चाहिए, उसके बाद ही एक्टिव होना चाहिए और तब तक दूसरे लोगों को चार्ज लेना चाहिए। तो ये हम लोगों की मान्यता है।
उसने तो अभी ऑलरेडी स्टेप डाउन जैसा ही किया हुआ है ना। आज की मीटिंग छुट्टी पे गए हैं, मीन्स क्या है कि ये लोग जब तक थोड़े पीरियड में जो उसका सर्च हो जावे और क्लियर पिक्चर आ जावे तो फिर स्टेप डाउन करने का जरूर नहीं पड़े। अगर उसमें कुछ ऐसा प्रॉब्लम दिखेगा तो मैं तो मानता हूँ कि सी विल कोऑपरेट। वो गवर्नमेंट को कोऑपरेट करने वाली लेडी है, शेयर होल्डर का भी सोचने वाली लेडी है। जब तक हमारा ख्याल है कि चंदा जी तो बहुत रिस्पेक्टिव और एकदम बहुत बढ़िया। हम तो उनका एशियाई का मीटिंग में भी एक दफ़े लास्ट ईयर गए अटेंड किया था, तो हमें तो बहुत संतोषकारक उन्होंने जो जवाब जो हम क्वायरी पूछते हैं तो तुरंत जवाब बहुत अच्छी तरह से देते हैं।
All right, on that note, I think it's time for me to go and get some coffee. Why don't you do the same and catch up on all you need to know that starts in just a few minutes only on Bloomberg Quint.